you're going to drive the debt from somewhere around $32 trillion up to about $50 trillion, correct?
Yes, but what I believe is the single most important metric.
All right, hello and welcome to Camel Finance. I'm your boy Camel, and today is the start of the Easter bank holiday weekend. So first of all, happy Easter to anyone that is watching, anyone that is partaking in Easter. Today, I want to cover a couple of things for you. I want to show you that sentiment's a lot worse than I think is justified. We also had the charts hold some critical levels, which I wanted to see, although for the week, they basically haven't changed at all. So I'll show you that. We, of course, have limited or no trading, depending on where you are in the world, today and on Monday. But we look out to the CPI print, which is on Wednesday next week. That will be the big major market moving catalyst, in my opinion. And I think we can get some upside. So without further ado, hit that like button and let's get into this. Paris, I haven't covered this really, but in Paris, they're still rioting. It's been almost, 4 weeks? Correct me if it's more than that. But they've been rioting non-stop. They've even set fire to BlackRock as part of this pension reform act. So it begs the question. I don't think any of my viewers actually are based in France, but if anyone knows, is this really just about them raising the pension age by a couple of years, the retirement age? Or is there something much more sinister going on? Because to me, this speaks to them losing everyone's pension. And of course, I am quite distrusting of banks, distrusting of pensions, so maybe it's not as bad as that. But to me, I don't know. This seems a little bit more severe than just raising the age by a couple of years, which is what's being reported over here in UK media. So if anyone's got any insight on that, please do let me know in the comments. The sentiment, as you can see here, is at 33% bullish, which is well below the historical average of 37.5. We need to see this move into about 45 before we consider to pull our profits and short this market. So all the while, the majority is on the wrong side. I continue to be optimistic, cautiously optimistic, and looking for higher numbers in the market. We had Bullard come out and say the balance sheet reduction was successful so far, so we should stick with it through 2023. And Thomas here nails it. Look, these guys must be drunk. How can you look at this and say this was successful balance sheet reduction? I mean, these guys, they're just trolling at this point. And remember, the sum of the top 3 central bank balance sheet moves exactly in tandem with the NASDAQ. So you can see here, the white is the central bank balance sheets, which are beginning to expand again, beginning to be increased again, thanks to new and freshly printed money, which always finds its way into risk assets. The yellow chart here underneath is the NASDAQ 100, which, as you can see, moves in tandem with liquidity. So this continues to be a liquidity story. And all the while they continue to print more money, I continue to remain bullish on the stock market and on Bitcoin. Simon here asked a brilliant question. If this banking crisis is really over, then when are these bank stocks going to stop falling? As you can see, still a lot of damage being undertaken at the moment, but Bitcoin does not care. Look at Bitcoin go. I've been saying this over and over again, pretty much since the start of my channel. Bitcoin will continue to smoke every other asset class. And that is exactly what we're seeing at the left-hand side of this chart here. You can see, and keep in mind, it's smoking the NASDAQ and the S&P at a time when the NASDAQ and the S&P are putting in some of their best quarters in years. So having even a small allocation, a few percent of Bitcoin, will significantly outperform any portfolio that is absent of Bitcoin allocation. The difficulty to find a Bitcoin mining block is up 32% year to date. So I'll pause here to quickly go over difficulty if you're not familiar with it. As more and more miners plug into the network and compete to mine Bitcoin, the overall computational power of the network is increased. So if we did not adjust the difficulty, which is how complex or simple it is to find a hash of a new block and add it to the chain, if we did not increase that or decrease it relative to the amount of computers plugged into the network, then as computers got more powerful, as more and more of them joined the Bitcoin network, what you would see is all of the Bitcoin just be rapidly drained from the system as more and more computing power was added to the network. And given that we only have 21 million Bitcoin, we would soon run out of them, wouldn't we? So Satoshi thought about this, he figured out how to solve this problem, and to do so, he uses the difficulty adjustment. So as more and more of these computers come online, as more and more powerful computers are released every year, the difficulty is adjusted approximately once every 2 weeks to make it harder and harder to find a block. This ensures that the blocks are still found on average of once every 10 minutes, and therefore we don't drain all of the Bitcoin out of the system prematurely. And so with all that said, the difficulty is up 32% year to date. Why? Well, because the hash rate has been skyrocketing. More and more and more miners have been plugging into the network, and therefore we need to keep increasing the difficulty to ensure these Bitcoin are released on schedule. On a percentage basis, this is pretty typical. But in terms of sheer computational power, you need a lot of resources to push the needle this quickly when hash rate was already at 240 terahashes at the start of the year. What is most likely happening is someone who has access to absurdly cheap power is plugging in any machine they can get their hands on. And so you can see the price here in grey. The yellow here is the difficulty, and as you can see, ramping up and up and up every couple of weeks. The reason for this, like I said, is an enormous amount of miners are plugging into the network to compete for the remaining 1.8 million Bitcoin that there are left to be mined between now and 2140. So Bitcoin continues to do Bitcoin things. Bitcoin continues to look fantastic. In fact, let's start with the ball of all balls. All right, so here's Bitcoin. So as you can see, still hanging around here. We could obviously break up or down, nobody knows yet, but my suspicion is that we're going to drop into this cycle low any day now. I think around the 9th, that would be a perfect half cycle 30-day low. And then I think we can come out of here, having trapped a bunch of balls and shorts in here. Kappa will come out and say, I told you so. And then we're just going to come out of here swinging, making our way up to that next cycle low before we can go again. So that's how I see it. Of course, I'm open to being proven wrong, but as it stands, not too worried about that. Ethereum is potentially giving us an early indicator that we might not see the half cycle low. Instead, we might just break out of this range that we're in, like Ethereum has done. So is this going to be breakout, retest, resumption, retest to this top of this sort of range here? Or are we going to now roll over and drop into that cycle low again, causing a bunch of bears and shorts to pile in here and say, I told you so, only for us to find that cycle low and go? That of course remains to be seen. But all I'm saying is I am very, very, very open to seeing a pull down over the next couple of days. Before then we can resolve higher. XRP, I'm not exactly sure what's going on here. I think it's too early to tell, but I think, as I've been saying over and over again, we've got sort of two strategies here. We could move the goalpost, we could move the trend line and say, we'll see how that goes. Does that give it enough room for us to do something like this if it's going to do it? Or instead, are we going to be looking for a distribution pattern to show up? Something like this. Now, it won't look exactly like that, but I would not be at all surprised. The thing to look for if that's going to happen is we come up and we make either a equal high or ever so slightly above or below it. If we do something like this and then break down, that will be the trigger. So again, if we end up with like a triple top or a double top, even if these are just, you see how this is like high, slightly below, it could have easily been high, slightly above. But the thing to look for if this really is going to be distribution is, you see how the high here, this is significantly above that one. Well, it won't look like that. It will look much more like a triple top or a compression. So that's what we'll be looking for. And then, like I keep saying over and over again, we'll be looking to draw a trend line somewhere that I think is suitable and exit on a breakdown if that's going to occur. Ordinarily, we would be respecting this trend line breakdown and drawing a new line and then looking to buy the flag break out of that. Because XRP moves so quickly, I do want to give this thing space to shoot off, because if it can just do something like this, then that will be an enormous profit. That'll be the sort of trade. You only need one or two of those a year, and that will pay your entire salary. So that's what we're looking for. Of course, I am taking huge risk. I should make this very clear. I have chosen to take huge risk here because there's nothing to say that this doesn't do this over the next couple of days, right? In which case, I had a big profit, especially up to this point, and I have chosen not to take it. But each to their own. Like I said, full transparency. You know exactly why by now, I'm sure. Dollar still contained under this red downward sloping resistance line, so therefore it's still on this cliff edge, isn't it? Because there's not much below this. If it can break down from here, then I expect to see the 90s very, very quickly thereafter. And of course, risk should come on strongly. US 10-year yield still looks pretty heavy, doesn't it? Does not speak to any kind of counter trend bounce yet. Now that can change, and it can change quickly. Same as with the 2-year yield, but as it stands, they haven't changed yet. TLT, however, is beginning to change. Look at this. I thought we were going to get a test at the bottom of this range, and instead we've reverted halfway down, and now we're coming in for a test at the top of this range. So it'll be really interesting to see if we can get a breakout here. Can we signal a recession trade coming on in the face of course, the precious metals breaking out as well? We'll have to listen to this, take this one day at a time, and see if we can pick up any subtle hints from TLT as well as the metal markets. Speaking of the metal markets, gold making its way up to the all-time high range. So again, it should be no surprise to you, because I said this over and over again. We're either going to come in here and get a big, strong rejection, in which case we'll draw a trend line and buy the break, happy days. Or if we don't do that, if we get some kind of consolidation and a range break, that has to be a long targeting way up in the empty space above. Silver, we've got a starter position called out well ahead in advance. I was even talking about buying a breakout above the top of this box when we were all the way back here, but we didn't get that. We missed this little push up here, and now we're in looking for the top of the range. So 30s at the top of the range. Natural to expect some kind of reaction at that top of this range at $30, but if we can consolidate similarly with gold and then break out, then we should be looking for some major upside in silver as well. So stay tuned, hit that subscribe and notification bell if you want to see how I deal with this market in real time as a pro swing trader. Miners, same sort of deal, isn't it? Currently looks like breakout, retest, resumption. So can this push off? It's the junior miners, same sort of thing, isn't it? Breakout, retest, still holding above for now. So can it resolve to the upside? That, of course, is to be determined. But all the while, we're not stopped out. Then we remain long and strong. Natural gas is still contained under this line. So hopefully we can get it down towards 1 and then we can get a breakout and that can be a long like I've got lined up here. So hopefully that can be the case. If it breaks out now, I'm not really too interested because there's not much space above before it will get hung up in this blue box. So take it one day at a time. Over in the stock market, things start to get very interesting. So we've had this little pullback, but it's undeniable. We had strong closes above the board. Now for the week, we're kind of flat across the board. We haven't really made any changes for the week in terms of the stock markets, but we haven't broken down either. So all the while we're in this sort of neighborhood, I think it's reasonable to expect further upside. Of course, CPI on Wednesday could drive this market significantly higher or significantly lower, depending on what the print says. The Nasdaq came down, wicked its prior high, and then rocketed higher. So this is a really good look because we have the downward sloping repair from this red line here. We've pulled up, pulled back, retested the breakout level, repaired the green downward sloping line, and now we're above that local high here. So all the while we're above here, happy days. This line here, this yellow upward sloping support line, I know this is way too many lines to be fair. We could get rid of this box now. I don't think we need that. Okay, so hopefully this is a bit clearer. So we've got this blue downward sloping bear market resistance line, breakout, retest, as you can see, and now repaired via the green. We're now above the yellow as well. And as long as we're above this upward sloping red support line, then there's no reason not to remain long and strong. The Dow Jones, as you can see, much simpler TA, just the bear market resistance line in blue, and since then looking to repair via the yellow breakout. So again, still reasonable to accept higher numbers from the Dow. Look at the VIX as well. Did you notice what the VIX did yesterday? Put in this nice little bear flag and it's broken to the downside. We're below 18.5 for the VIX. So this continues to play out in real time exactly as I thought it would. This continues to be conducive to seeing all-time highs in stocks before too much longer. Russell 2K doesn't want to break out just yet. So we'll see how this goes. The UKX is right into resistance. So is it just going to hot knife this and go? If so, that can be a long from us. But if it's going to roll over, then we need to give it some more space and move the long to the breakout, wherever that should occur. Tesla, only covering this because I know a lot of you really like Tesla. So for me, this is bearish. Okay, this is bearish. We took this breakout. It turned out to be a fake out. We're also below this bottom of this box now. So to me, this looks like consolidation, a bear trap, then a bull trap, and now looking to resolve lower. So just be mindful of that if you're in Tesla. I currently have no position, as you can see. If we could get above this box, then that could be a long for me. And in fact, if we could get above this green downward sloping line as well, that could possibly be a long from me. But as it stands, no position for Tesla. Apple continues to look really good, doesn't it? So breakout retest, looking for that resumption and a further continuation of upside. And lastly, the crypto-related equities. So you can see here, Coinbase kind of hanging around. I might end up having to pay a stop on this. And I say that just because it's kind of close already. And I expect this drop into the half cycle low before we can resolve higher. So I'm not going to do anything. I'm just going to leave it. Hope I don't get stopped out. If I do get stopped out, it is what it is. MicroStrategy, however, looks a lot better, doesn't it? So I could see one final dip as we get that half cycle low, followed by what I hope will be a range breakout for MicroStrategy. And then I think this thing is going to do numbers very quickly. If you look at the gap here, this is 290 to around 500 in no time. So things continue to look very good for MicroStrategy, in my opinion. Riot as well looks like it's no doubt in a significant uptrend as it stands. So happy days. Have to be open to seeing a little shakeout. But if that happens, then I'll think about buying the dip for Riot, since this is by far one of the strongest blockchain stocks out there. Marathon as well, clear sideways base building here. So again, open to a half cycle low shakeout. Before then, we can rocket higher. So bring on next week. That's all I can really say. So I hope you found value here today. I hope you're going to enjoy your Easter break as much as I am. I hope you're doing well in life. If you have anything to say, throw it down in the comments. If not, enjoy your weekends. Take care from me. All the best. Cheers. Bye.